You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That rockin' tune means it's time for the rockin'est of all shows. Yes, it's time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com. So as, of course, from the old Options Insider Radio Network, we have a variety of content available for you, pretty much a variety of different ways. If you like to really mainline, go deep into the archives of years and years gone by, great guest discussions on volatility, well, guess what? We got you covered, theoptionsinsider.com. If you don't have that, sorry, listeners, we're getting visitors here in the studio. If you don't want to get that, you want to get it delivered to your platform of choice, well, then iTunes, TuneIn, Stitcher are the platforms for you. And of course, if that's all too much work for you, you want to just listen to us live every week, you can do that too, Mixlr.com. Just search for Options Insider on there, and you'll get us every Friday for the show, noon Central, 1 p.m. Eastern. However you listen live after the fact, make sure you hit us up, and we too can chat here, live here, get messages all over the place here, listeners. It's very distracting, but we'll soldier on here on the old show. And joining me on the old program to help me talk all this volatility business, the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line Capital, and I keep forgetting the name of the new one, and the new Volatility Fund as well. Mr. Meatball, welcome back to the show. What's the name of the new fund again?
Well, no, they're both under the Carmen Line Capital umbrella. There's just one is the Vol Fund, the other one is called the Broadcap Edge Fund. So, and it is the smarter way to get long the S&P.
Smart indeed. Know what else is smart? Is doing a little bit of volatility reviewing, so let's do it. Without further ado, it's time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, stuff's just popping off here left and right. Phones ringing, messages flying in, people coming in, all sorts of distractions take me off my game today. But you know what? I'm gonna rally through, because that's what a host does. By the way, Mr. Meatball, before we kick things off here, I just got to say I'm looking here at my screens, and I got to say sometimes I make this game look easy. I'm looking here right now. Actually, just ticked up. I am exactly, not even a 0.01 difference. My prediction for the end of the show, 13 double. As we are talking right now, 13 double. Does it make you a little scared to be on the show with me sometimes, Mark?
No, because here's what's going to happen while we're talking. The S&P is going to rally. VIX is going to fall off. And then I'm going to feed you a big shut-up sandwich. And I will end up being right. What do you think about that?
You see what I'm doing here now, though? I'm celebrating early, because you never know what can happen within the course of an hour.
Don't spike the ball. You don't want to be. I'm going to down BB you and slap the ball out of your hand before you can score a touchdown.
No. We could have another Hillary Clinton scenario. Something could unfold. Many things have unfolded over the course of the Volatility Views hour in the past.
I've got the Russians buying up S&P futures as we speak.
Well, there you go. You call your Russian contacts. But, it's just, I consider it to be within 0.1 is a bullseye in Vol Views land, or crystal ball land. So if you get it within literally on the dot, that is literally the most bullseye you could possibly have out there. So I had to just trumpet it there. Let's just declare me the winner now. Let's not even worry about any later stuff here, because who needs to deal with that nonsense? As we move on to what's lighting it up today, we are of course streaming live and recording at noon Central here on May 18th, Friday, in the one true time zone, the Central time zone here. So as we're recording, kind of middle of the session here, market's kind of mixed. As you mentioned, VIX Cash right around 13 double. Oh, actually, it's 13.52 now. I take it back. I'm 0.03 away. Therefore, I have missed terribly. But yes, sometimes, it's a burden being this accurate, Mark. It's my cross to bear in life. That and lactose intolerance. My two crosses, but I can deal with those. All right, so we got a little sell-off here in the S&P, off about 0.25%. The Dow taking the other tack, up a little bit, up fractionally. The tech-heavy NASDAQ, probably the leader to the downside today, off about 0.33% or so. And all this kind of upside, downside, VIX is kind of It's up a little bit in VIX Cash land, up about 1/10 of a handle. If it stays right here for the course of the next, 49 minutes or so, I'm looking pretty good. I got a smile on my face. Even though if Mark's prediction came to pass, I wouldn't be sad either. That wouldn't be a bad thing for me either. So either way, I guess what I'm saying is either way, I win. Before we get on to that, Mr. Meatball, it's been an interesting week. We've had earnings. We have, the aberrant tweets coming out of Washington driving things. We've got talks of escalation in the Middle East and then de-escalation of trade wars and a whole bunch of other stuff getting mixed into that volatility cocktail to lead us out to right now. We're right about 13 double here in VIX Cash land. So what's been catching your eye this week and today from a volatility perspective, sir?
I mean, there really hasn't been very much. We saw, a little bit of price action on Wednesday, but for the most part, things have been extremely calm. Thus, the easily sub 14 VIX, and there was like a little bit of a rush to on that Wednesday at a certain point, but since then, it has been there has been zero appetite for premium and for protection.
Yeah, interesting. Speaking of appetite for things, excuse me, people very much have an appetite for VIX calls. And it's kind of just the thing. We talked about it many times. It's always going to be VIX is a call-heavy instrument, pretty much by design. That's kind of the use case just about everybody comes to it for. These days, we've seen puts take their fair share of love as well. So it's not all calls all the time anymore. But it's still only it's about when it's only 2.6, 2.7 to 1 calls over puts, it's actually pretty light. Puts are actually doing pretty well. So that shows you how call heavy VIX is on any given day. As people kind of wonder, we talked before about all that slew of data. We talked about 20 odd years worth of closes that we parsed on the show recently for what's going on. Someone took that data and they sent it. I think it was actually your buddy there, Mr. Meatball, Mr. Mark Brandt, sent in this data that he found. Someone sent him on Twitter of a chart of the distribution of all the VIX options settlements. So all the settlement prices we talked about, weekly and monthly VIX settlements, all 241 of them today, and they graphed them according to exactly where they settled. So you can look at this, and as they say, a picture is worth 1,000 words. And this one kind of puts a little bit of interest if you always saying, hey, what if I want to buy those 20-plus handle calls as my quote-unquote portfolio hedge? How often does that pay off? Remember, we're talking settlements, so these things are expiring in them. We're not talking, they flip over and they come back in. That could certainly happen. That has happened. But in this case, we're talking about these options actually going out with some meat on the bone, in the money here, and looking at the old histogram here, the meat, the lion's share of the settlement with the most incidences is in the 12 to 13 range, where there have been, looks like this chart, right about 29 or so, a number of settlements in that range. Below 10, there's been a whopping 12. I think we got a good chunk of those last year, 2017. 10 to 11 has about 21, the same for about 11 to 12. 12 to 13, again, that's the leader with about 29. Then we get settlements in the 13 to 14 range. You get nice 17. Decent number, actually. Number 2 is 14 to 15 range, which is right about 24. Then it comes off again. There's been 14, 15 to 16, and then about 17. So number 3, actually tie for number 3 between 10 to 11 and 11 to 12. So all of you out there who are saying it's all about VIX at 20, Think again. And then 16 to 17 coming in with about 17 settlements there as well. Then it obviously falls off as you go farther out there. Once you get around 20, there have been 8 settlements in the 19 to 20 range, 9 each, 20 to 22 each in that range, and then about 8 in the 22 to 23 range, and again it falls off. Ironically, there have been, looks like 6 above 40 year to date. So all the people out there who are loading up on 37 halves and swinging for the fences out there. Maybe you want to take another look at this chart. Again, Mark, this is data we've kind of talked about before, but it's interesting to see it graphically. And we haven't really talked settlements before. We've kind of just talked closes. So any surprises for you in this data? Are you feverishly, as we speak, redistributing the volatility fund to line up with this histogram here?
No. And there really aren't a lot of surprises. I think if you think about what's happened this year, the way all that lines up makes the most sense. A lot of people think, oh, volatility is going to be really high. Well, what that tends to mean is most of the settlements will be above 17, not most of them will be in the 50s. It's very hard for VIX to stay in the 40s and 50s for very long. You need a lot, and I mean a lot of movement for an extended period of time. That just tends not to happen. So this kind of lends more to how when setting up hedging and putting a thought behind how to protect oneself, this is the type of histogram that should really come into mind, not the kind of 2008 scenario, because the 2008 scenario happens once every 50 years. Not whereas something like 2015 or what we just have gone through maybe happens once every 3 to 5 years.
Yeah, I was at an event earlier this week, and they were talking about, logically and mathematically the big spike we had in VIX land back on February 5th and into the 6th. Mathematically, that should be about once every couple hundred years, given the just the extremity of that event. And yet they pulled the room and said, who here thinks it'll be another 200 years before we see VIX or whatever its analog is several centuries in the future spikes to these crazy levels. And no one raised their hands because, of course, no one would. No sane person would think that. So you're right. Mathematically, one thing, intuitively, and understanding where the settlements actually are is another. And in this case, this is a perfect example of why all those people, particularly in February, for whatever reason, the upside calls seem to come in hot and heavy in February. People are loading up on those upsides. Maybe you might want to take a deep breath and look again at this chart. It can maybe calm you and also perhaps put you in the right direction. Looking over here at our old friend VVIX as well. Ticking up a little bit today. It was coming into today pretty much unched from last week, right around 93. And as we're seeing it tick up a little bit today, which is interesting, about 2%, even though we're not getting a ton of action out there in ye old VIX land. Let's pull up the futures and see how we're looking out here as well. So the cash right around 13.5 still right now, and of course my futures feed is wonky, so I see nothing. This is just a compilation of all sorts of fun things going on in here today, listener. So let's pull up the backup chart to pull up this. There we go. That should help a little bit. So yeah, as I mentioned, the cash right around 13.5 or so. We're seeing, of course, the front month about a handle, 1.2 handles away out to June and July, out to about 15 in the quarter, so about 1.7. So a little bit of heft there, but nothing super crazy. We all know they came pretty aggressively for these futures into earlier this week and late last week. So there's not a lot of meat on those bones left to squeeze away. Mark, anything really surprising you out there in VIX futures land these days?
The curve is finally flattening, and we're finally getting some smoothing of the overall, the curve is not so flat. It's starting to steepen, starting to look more normal, starting to be a kind of a more standard contango, and that has led to kind of a pretty swift move out. It was the first time we actually saw people trying to kind of front run around VIX futures expiration, and which happened this week. We also saw, although less dubious, we saw some interesting printing on the VIX futures settle yet again. on Wednesday.
And what was your interesting take on that, sir?
Well, I mean, it was a we had settled 14.5 the day before, and we settled 1372. So, although there wasn't a ton of open interest on the 14, so there was a huge buyer of the 13.5s the day before. So I was a little surprised we actually didn't see a little further push, but the settle was still relatively far away from where VIX was until kind of that afternoon. That afternoon, VIX kind of caught up to where the settle was. So maybe in this case, settlement was just kind of predicting things.
Yeah, speaking of prediction, or perhaps using a little hindsight to be a predictor, Mark, we've heard a lot of different theories about what was driving that big sell-off in February, and of course the commensurate massive reaction out there in the volatility space, which of course laid waste to all the inverse vol spaces and vol products and has been debated ad nauseum ever since then. Well, we can add one more theory to that debate, Mr. Meatball. It was Goldman. I think Market Watch had a bunch of people had pieces on this. Goldman coming out and saying the VIX leaping to the quote-unquote highest level in at least a decade, or some retail volume, they said, leapt to the highest level in about a decade in the beginning of this year. And that's what they're pinning the massive move in volatility on. And let's see, they've talked a lot about, we can look at some of their data here. Per Goldman's data here in this report, households directly own 36% of the 46 trillion U.S. equity market, more than any other type of owner, and their shares rise to more than 50% if you include indirect ownership to mutual funds and ETFs. I don't really count that latter part because, of course, they have no direct control over that. So them out there doing whatever they want is not going to influence their fund managers. But that said, they looked at the retail volume. They took surveys and from big holders, the darts of brokers like TD Ameritrade, Schwab, E-Trade, all those players. They're saying their volume leapt to the highest levels in at least a decade, both in absolute terms and scaled relative to NYSE volume over here in the beginning of 2018. They have a cool little graph they included too. We'll put out in the show notes. They say that surge occurred at a time when composite trading volumes were otherwise low. March and April marked blackout periods for many U.S. companies, meaning they halted their stock buybacks programs in the lead up to the reporting of their quarterly results, temporarily moving a primary source buyer for the broader market. They mean all that, Mr. Meatball, translates into the surge in retail volume as a percentage of daily average trades. They're pinning that on the massive volatility we saw in 2018 as a result. So there you go, Mr. Meatball. I bet you didn't know that it was your proverbial Aunt Edna in Iowa who was to blame for all this turbulence. You buying what they're selling here, sir?
I am not. I don't think that was it at all. I think the move in interest rate, I think that if you saw how interest rates moved and how it adjusted the stock market, I think the smart money started trying to get out of the way. And maybe there was some piggybacking at the end. But retail tends to make moves slightly more extreme at the very fringe, but it tends not to be enough to truly move things. And I think that was the case again. Maybe we saw the very end of the extremity pushed by retail, but what you saw was a lot of money managers taking a lot of money off the table because they know they had basically ridden everything up higher and then ridden everything lower. The other piece is algos. I think algos just jumped all over this market and basically said, oh, we can force this thing down and make money, which they did. And then they ran it back the other way as well.
But, I met your aunt, and she seems a little crazy, Mark. So I think maybe she could have something to do with this. What do you think?
Maybe a little.
I'll take your resounding silence as a no. Let's move on. Just a little bit. She does sling a lot of VIX, that auntie yours, and so she could have been to blame for some of this. Speaking of slinging VIX, let's see who's slinging what today. A bit of a quiet day for ye old VIX Cash because everyone knows where it's going to settle out, right around 13.55 closing for the day. So there's no reason to trade it. It's right there. It doesn't need to be traded anymore. Everyone knows it's done. As we're talking right now, the options kind of feeling that right now as well. Only about 135,000 on the tape. The ADV has been slowly declining. Remember, beginning of the year, certainly around February, was over 1 million. It's not quite half that right now, but it's about 600K, 592K right now, which is a more average range for VIX options. It usually averages around 600, 660, somewhere in that range. So 592 is pretty much on the low end of that. Again, it is May. We're coming into the, shall we say, quieter summer season, so it's not unexpected to see a little bit of a slowdown here, and that was kind of reflected pretty much throughout the rest of the week. We had 135K hitting the tape today, 227,000 on Thursday, 450. That was one of the active days of the week. On Wednesday, 512 on Tuesday, and a whopping 621,000 on Monday. So the only day north of the ADV was Monday, hence our gradual decline to the south in that one. A call to put at about 2.7 to 1, so pretty much unched from where it was a week ago, yet again showing still puts having some life out here as we continue to move to the downside. So surprise, surprise, puts getting some love. Let's see what else is getting some love out here as you break down the hot VIX strikes, the big top 10 open positions in VIX land right now. Let's see what people are actually have on out there. And number one with a bullet is the June 20s. The 20s getting some love to the tune of 232,000 contracts open there. Number two, the June 15 puts, showing you again, the puts getting a little bit of love out here, 212,000 out there. Number three, the ever optimistic, particularly if you go look at back of that chart we were talking about earlier, the June 30s, 161,000 contracts open out there. The odds are not looking good for those, but then you never know. We got to dig into what paper was going on out there and what they were up to. Number four, the June 27th, about $1.50 open on that strike. Then we come down to our second and last put on the top 10. The June 13s doing 139,000 open as of coming into this morning. Number six, the July 30s. Again, people like themselves a 30 strike, 135,000 open. Number seven, the June 21s, $1.35 open. Number eight, June 25 is $1.35 as well. So pretty much tied right there. 500 contracts separating the two. Number nine, the June, actually, I'm sorry, I lied. The June 14 puts is the third and final put on the list, doing 133,000 contracts there. And rounding out the top 10, the ever pretty much at the money, slightly out of the money, June 15s, doing about $1.25 open there as well. About 5.8 million contracts open, about 4.2 on the calls, and about 1.6 million on the puts. Mr. Meatball, I know it's been a relatively quiet week, but any interesting trades? I know last week we were talking about strangles and all sorts of funky things going up out there in VIX options land. Anything catching your eye this week, sir?
Yeah, we're seeing a lot of kind of, we started to see a little bit of 1x2 starting to trade. Some June 1721s, saw a June 2030 trade up. Additionally, I'm seeing some pretty heavy call selling. Kind of a surprise, but just lots of people coming in just slamming calls. And you'll like this one. This one was kind of fun. They did the June 13 10.5 put spread versus the July 13 put. They bought them for 10 cents July over. So kind of a fun one there. But yeah, I'm seeing
10.5 put spread versus the July plain 13 put.
Yep. But the absolute biggest trade I saw all week was, and maybe this is our 50-cent guy coming back. The July 29 calls, 100,000 were bought for 47.5. Although he would normally pay 49 instead of 47.5.
I was going to say that's too cheap for him.
That's too good of a price. So it's probably someone hedging to sell him those at 49. But there is that was the biggest trade I saw all week. But a lot of kind of call selling on the tape. But that was the only one that really opened up my eyes in terms of real size was that. So there is not a lot of massive trades that have gone up this week, and I not 100% certain why, but even on the day that we had all that crazy action and VIX was 1470, we didn't see a lot of upside buying. just not a lot of demand. So, and the other thing is VVIX has really failed to catch any kind of bid, and it just tells me that people are happy to just sell primo on VIX right now.
Yeah, they're certainly not reticent to do that. I'm still looking at this that put spread versus put trade you were talking about, which is another. This is interesting. It for a while there, it was kind of quiet period. There wasn't a lot of exciting stuff going on out there in VIX land from an options perspective. Starting to see a little bit of life come back. It's funny you should mention our old friend 50 Cent, because he was going away. He was done. He had kind of fallen off our radar, and just recently people started hitting me up about him again out of the blue. So maybe there is something to your prediction there, Mr. Meatball, because I just recently started getting a bunch of questions about him again. And I said, why are people hitting us up about 50 Cent again? And there you go. Maybe we should change his name. Does 47 Cent have the same ring to it? I don't know.
No. And although 50 Cent is playing at Ravinia this summer, and Lauren and I are going to see him. Lauren, me, my wife. So, which is funny that it's all gone full circle. We've got a blue blood French guy buying 50 Cent options, and we've got 50 Cent performing at what might be the most blue blood concert venue in the entire country, Ravinia.
I was gonna say that's not really his scene. Usually you go there to eat some nice soft cheese and hear some cello music. And
exactly. So we're gonna go see 50 Cent. We're gonna open some sort of nice bottle of red, maybe some prosecco, get a nice charcuterie, and we'll get our little mini table set up in chairs, and we'll have a big old happy family potluck lawn fancy schmancy 50 Cent concert.
Yes, those things go high. How's he gonna have time to do that though? I know he's training to be an MMA fighter right now, so how's he gonna have time to do shows anymore?
Well,
he wants to go fight in a cage for a living. He wants to make 10 and 10 when he's got hundreds of millions in the bank. I don't.
Yeah, I think he's gonna be. I think it'll be interesting to see him performing. I'll just gonna say that. Yeah, no, yeah. So it should be fun.
Yes, I think what's the over under on how many times he'll get shot during the performance? So that's what's really
probably
you go about
none.
3, right? You're gonna go 3.
Also, the ratio of actual cigars to blunts is going to be pretty different than a normal 50 Cent concert.
Yeah, probably a little bit different out there. Looking over here, I know it is earnings season out here, and not a lot popping off left. We were talking earlier about our old friend AMAT, Applied Materials. This is the name that I know a lot of you folks like to trade out there, and they were popping off after the bell last night. They were pricing in about 2.25 for that straddle, so right around 4%. And here we are coming into the open now, and it's off 7.5%, off over 4 handles. So looks like premium buyers winning on that one, unless you just naked launched a bunch of calls and didn't do anything to hedge. And then you are probably a little bit of a smiley or a sad face going on out there right now. But a little bit of downside out here for good old AMAT. I know we had talked about what was up with that one from an earnings move report. Again, you guys can go find, if you like earnings volatility, got those reports for you for free on the Options Insider, courtesy of our friends over there at ORATS. And I'm looking at the AMAT report right now, and I said they were pricing in about 2.25. Their past average straddle price, which is, of course, the average of all their other ones recently, has been about 234. So they're right about in line, a little bit cheaper than that. Their historical projected move was about 95 cents. The actual moves in the past was about $1.50, so they're way beyond that. Same quarter move, so this quarter, last few years, has been 27 cents, so not a lot of moving going on there. The past year moves, so over the last 4 quarters, it's been 107, so again, it's been kind of a quiet player. And let's see, so looking here, it looks like this one was looking a little bit actually rich, which is kind of interesting. And of course, looking like the downside is winning out here going forward. So we'll keep an eye on AMAT also look a little bit abroad to some of the other sectors we like to keep an eye on here. Good old crude volatility in the form of our old friend OIV, aka the crude oil VIX, aka the product that everyone, including myself, thought would just take off with the retail public, and yet no. So it's just an index we like to keep an eye on. Right around 24.5 right now. That's about 1.5 below where it was last week. So all this continued talk about crude, and will it keep rallying, and an upside for crude, and can we maintain over 70 and all this kind of stuff. It's all translated into vol coming off a little bit because, you know, you got to need a nice sustained move in crude aggressively to really keep that vol up. And usually in the past, it's been to the downside. Now, if you get way north of 70, you're going to see some of that vol come back in a little bit as well. Again, if you like all that talk about skew and everything out there in crude and other commodity products, stay tuned for TWIFO coming up in about an hour on the old network or wherever you find this fine podcast program on your device of choice. It'll be in there probably already as you listen to this. And over there in gold land, I'm talking myself to the future then, which is kind of fascinating, a little bit meta. Gold vol also in terms of GVZ, which is of course the gold VIX, aka the other product we thought would light it up from a vol perspective. Two great tastes that taste great together, VIX and gold. What could go wrong? And yet, for whatever reason, no one really slinging this one either. Hence, no tradable products, at least from an options perspective out there. GVZ coming off yet again, about 11.30. It's a little bit shy of where it was last week. Not a ton, but a little bit off. So again, gold vol, if you've been watching the metals out there, it's been pretty anemic and has been for quite some time. We've seen some brief signs of life as it kind of flitted to life, but it all came crashing back down. It seems like that's the case again this week. And you all know, if you've been watching the gold space, a lot of that story is driven by the dollar and rates these days. Again, stay tuned for all things gold and commodities coming up on TWIFO in a little bit. Mr. Meatball, I know you're busy over there slinging a lot of stuff in the new volatility fund. Anything catching your eye from a commodity volatility this week, sir?
Gold got it in the chin on Wednesday, and yet we didn't really see the massive spike you might have expected in volatility. The premium, it went up, but it drops a massive amount, and vol managed to rally a point, and it has since come off since then. So, kind of been a lot of
hasn't been a lot really to write home about over here. Just looking here really quickly, see if there's any interesting stuff out here in crypto land. And there is some. If you want data on crypto vol, actually TWIFO is the place to go. We have some of that data for you. Meanwhile, though, we got a little bit extra time on the show this week, so we know you guys like to hit us up with all sorts of crazy questions. So we thought we'd give you a little bit of time on the old show this week to open up early the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show where you guys take the reins, questions, comments, insights, all sorts of fun stuff. And we also ask you guys questions on occasion, like we did again this week, talking about crypto. We asked you guys, have crypto on the brain? Our friends over there at CME, they launched a new, an Ether index this week. Not quite a tradable product, just an index. Something to keep an eye on. Hopefully we'll turn into a tradable product one day. But we all said, hey, we want tradable products. What do you guys really want next in the crypto space? Do you want Bitcoin options or some more futures like Ether futures or Ripple futures or Litecoin futures? Mr. Meatball, take a flying guess what our audience overwhelmingly wants, sir.
I'm going to guess options.
You are correct, sir. To the tune of 74% want themselves some Bitcoin options. If you're on that tip, stay tuned. like I said, in about an hour for TWIFO, where I'll put that exact question to the guy who runs crypto for the CME and say, hey, when are we going to get some options? So hopefully, maybe, no promises, but hopefully, maybe we'll get an answer to that question sooner rather than later. Because you guys have been asking us for ages. I, in turn, have been doing my job and asking everybody who makes these products when we're going to get them. And so far, no love for Bitcoin options. I would, at this point, just gauging, talking to the SIBO folks down at OIC last week or 2 weeks ago and engaging with the CME, it does seem like everyone's pumping the brakes on that side of the fence. Some of it has to go through the SEC, so that's a much longer, more involved process. And the SEC has said they're kind of pumping the brakes on all things crypto right now, so that could certainly be a part of it. Also, SIBO is kind of blaming it on their tech migration, which won't be done for the main exchange, I think, until next year sometime, so they can kind of put it on that. There's a lot of things people are pointing to saying why they won't do it, which is kind of a little bit of an opposite of what we saw last December, and everyone was racing to get their futures out of the gate. So hopefully, futures are fine. They're fun. I don't want to touch a crypto future with a 10-foot pole, but you guys might like them. I'm on the Buffett camp of, I sure wouldn't mind shorting Bitcoin, but I sure as hell wouldn't mind buying a put on Bitcoin, but I sure as hell don't want to short it. And we need some products to help us do just that. All right, let's see what you guys have lined up for us today. Trevor Salsman. Sounds like a kind of guy who'd be going out to Ravinia with you, Mr. Meatball. Trevor Salsman wants to know, why no love for a ZIV on volatility views? Why no love? Well, it's funny. Yeah, I guess we don't really talk a lot of ZIV. ZIV, by the way, listeners, if you're not familiar, it is the velocity share, it's easy for me to say. Daily inverse VIX medium term. ETN. We talk a lot of these sister type products here. Before, we all know what's happened to the inverse vol space as a result, and a lot of our attention was fixated on XIV and SVXY, which are the ones that everyone and their mother wants to go out there and sling. Also, not so much with the options on ZIV, which is another issue for a show like this. I don't know, Mr. Meatball, you brought up ZIV a few times before. Do you, I know it's kind of less than it used to be, but is this one you used to keep an eye on a lot and would keep an eye on for your analysis, if not for trading?
Yeah, it's an interesting one in that it's a lot more stable and less likely to blow up than some of the other ones. Now, obviously, it still took it on the chin when we had that big blow up, but not nearly the same way the other ones did because it uses midterm. There were a lot of people that had kind of XIV and SVXY in their retirement. This is, I think, a much better one in terms of kind of set it and forget it. Now it's still dangerous. It can still lose a lot of money fast. But it's not a bad one. It's the inverse of VXZ instead of VXX. So, good. It's good stuff.
Yeah, they all have their place. I think for us, the lion's share of it is we like products with a little bit of options to sink our teeth into here, and so that's kind of taking it up. But yeah, you're right. As indicated, we talk VXX. Oh, not VXX, but we talk VVIX, of course. And there's no options really there. It's just an indicator. So indicators, you're right, have value. Maybe we'll rotate. Clearly, you have some love there, Trevor. And Mark, I think you should say hi to Trevor when you're out at Ravinia. I think he'll be there with you. So make sure you say hi to him.
Trevor.
Say thank you for your great question to the show. Tom next. Tom Frank. Let's see how many we can get to today, Mr. Meatball. We got a lot of people writing in here. Tom Frank wants to know. He's talking about something. I think we talked about this a while back on the show, and also I think maybe on Option Block too. He says, "I'm not sure I agree with your consensus that covered calls are better for novice options traders. Puts typically have higher implied volatility and should generate higher returns than covered calls over time and have a higher risk." I think he meant to say risk reward. The novices would probably appreciate the higher returns. If I recall correctly, Mr. Meatball, and I do believe I do, this is in regards to a question we got a while back on the show where someone wrote in saying, what do you think is easier for like a novice options trader to understand? Obviously, synthetically, they're the same, covered call, short put. But which one do you think is really better to, like, if you want to teach a newcomer about options and how to do income trades. Which way are you going? And I said, no question, I'm going the covered call because it's just a thing people can usually wrap their heads around a lot easier. People coming to options usually come from the stock world. They understand being long in equity. Now you tell them, okay, you're going to work a limit sell order on this and you're going to get paid to do it. They can usually wrap their heads around that pretty easily. On the flip side of that, if you say to them, hey, you're going to sell this thing, and then you're hoping to really buy it at this strike price if it goes below that, it's a lot more counterintuitive for people, and it's a more difficult way to go. So if you're talking straight out of the gate, brand new neophyte options trader, just want to learn the basics, I go covered calls 99 times out of 100. I think that's what the question was about. He's saying, the higher implied. I get what you're saying here, Tom Frank, all these things, and you should actually listen to that great episode we did about the put right versus BXM for some of the interesting things about the put rights versus calls. Some interesting. Go back in the archives of all views for that one. That's kind of a fun one. That'll break down some of this stuff you're talking about. But that wasn't what the question was about, Tom. The question was about which one is easier for a newcomer to understand. Mr. Meatball, you're out there on the front lines of the old edumacation, dealing with the retail folks a lot. What's your preferred avenue of approach? You go covered calls, or are you going to terrify them with the short puts?
I think the reason why covered calls are easier for people to understand is because they already generally own the stock. Most people start with covered calls via doing it as an income strategy over stuff they already own. But that's why it's easier. In terms of the point of Mr. Frank, frankly, Tom, I agree with you that from if I was just going to straight up teach somebody, I would teach them to start selling puts to get into names. But for the average investor that already understands stocks, that is a totally different scenario.
Yeah, the question wasn't about efficacy, in which case he's right. The question was about ease of understanding, ease of intuition. And it's much easier to intuit a covered call than it is a short put. Selling something to buy something is not an easy concept to grasp at first approach. All right, let's see. We got a bunch more here. Olive Trader 2, number one must have been taken. Chiming in here. He's listening to the show, I think, saying, what kind of volatility reaction should we expect if trade talks are easy for me to say today? If trade talks are successful or unsuccessful, he wants both sides of the scenario. Well, I think the latter part we kind of already saw because we saw that extreme reaction the second Trump put out that tweet about trade wars are great and they're easy to win and all the other lead up to that. When we saw all that and people were really expecting a trade war, we saw that. We saw the S&P sell off. We saw vol get much firmer. We saw VIX shoot up. We saw the futures shoot up. So I think, if trade talks are unsuccessful, I think we could see some sort of mirror of that, maybe a little bit exacerbated because it's the actual thing, maybe a little bit mitigated actually because we kind of already had that. And so maybe that took a lot of the shock out of the system. One thing we all know is repeated shocks. The latter ones are a little bit muted. But again, that was all kind of hysterics. It wasn't real actual trade war yet. So I could see somewhere around that range, maybe a little bit more, maybe a little bit less, depending on if the market thinks this has kind of already been there and done that, or if they think, oh no, this is the real thing. Got to get ready for that. If trade talks are successful, that's more challenging, I think, scenario. I think so. Kind of seeing that kind of play out right now. People are assuming we've already seen the talks dialing down, the kind of ratcheting down the tensions, China walking us back, even the U.S., we're kind of walking it back. So people are getting away from that more histrionic initial position, which caused all the turmoil and volatility to begin with. So it seems like we're kind of already, I wouldn't say all the way there, but when we look at volatility is already coming off. We saw the futures have come off. We're in the mid-teens to lower teens when it comes to VIX Cash now. So I have a hard time seeing things get crushed, a ton more. I know Mr. Meatball's deeply short vol, even more than I, so he probably would come out here and say it's going to hit 9 in the VIX Cash. Is that what you're feeling, Mr. Meatball? We probably wouldn't be too upset if that were to come to pass, would you?
No, I would not. I would not indeed.
So what do you think would happen in these two scenarios?
I tend to agree with you. I think that you kind of hit the nail there.
I do love you agreeing with me, but it's no fun from a show perspective. We have to fight angrily for the audience out here.
Sorry, folks.
I hate you, sir.
Every now and again.
Well,
Every now and again,
it just
the blind squirrel finds a nut.
I set the tone at the top of the show when I hit a literal bullseye in VIX Cash, so you literally cannot question me for the rest of the show. I clearly have proven my magical powers yet again here. It's almost a little scary. I think I could see why you'd be a little bit nervous around me these days, Mr. Meatball, because the unerring intuition is a difficult thing to overcome. All right, Bruce Stern wants to know. I know that contango in VIX futures is the best scenario to foster VXX erosion. Yes, that is usually the case. He goes on to write, but is there a particular degree of slope or term structure that is optimal for maximum roll decay in the VXX product? Or is it just a question of the steeper the term structure slope, the better? You know who'd be awesome to have on to discuss this question with? I know Bill Valentine got really deep into what causes VXX erosion. We had some listeners who used to write us treatises about this topic as well. Many, many pages. So there's a lot that goes into the whole VXX erosion calculation, more than just buying expensive, selling cheap, even though that is a big driver of it. But yeah, you're pretty much on it. I don't know if there's a 36 degrees slope is the answer. I think in general, your latter part kind of hits it on the head. For the most part, steeper, the better. I'm trying to think of a scenario where a less steep slope in the futures would equate to more aggressive erosion in VXX than a steeper slope. And I am hard-pressed to think of a scenario where that would come to pass. Mr. Meatball, are you on the same tip? You think it's pretty much steeper the better? Or can you think of some nuanced moments there in between where maybe even a flatter skew or a flatter term structure could have a more erosive impact?
The only way a flatter term structure would have a more erosive impact is if you're about to have a huge vol crush, because then that'll exacerbate the actual expansion of that exact same, that'll exacerbate the expansion of the premium.
There you go. Easy for you to say, sir.
That'll exacerbate the decay in VXX. It'll make the situation for VXX worse.
Have you been hitting that Pinot Grigio a little bit early today, sir?
No, I wish.
Makes the show go that much faster when you're half in the bag. All right, we got time for a few more here. NMZ56 NMZ56 says, I'm not sure that my favorite vol product has been invented yet. Outside of a truly tradable cash VIX, maybe we need some sort of cool earnings volatility product. Maybe something that allows you to trade the straddle without actually having to trade it. I think that would open the strategy up to more people. Interesting. We get a lot of questions on this vein of late. What is your dream volatility product? I think that's what he's responding to. He's saying his favorite hasn't been invented yet. People love the earnings. People love talking about earnings vol and earnings straddles. So conceptually, I think that would be cool. But yeah, I have a hard time. I think maybe it's just the old school options, trader, market maker in me. Whenever I see these structured products that are designed to replicate, in this case, an earnings straddle, it makes the hair on my back of my neck stand up, because I know, A, it's not going to perform as well as the actual thing that's in the marketplace. You can go do that yourself right now, replicate that very easily by buying or selling both contracts. So you don't need that product. So there's going to be some sort of slippage. There's going to be some sort of fees. So it's never going to be as good as the main thing. And then how do you structure it? Is it maybe just for the week? So you take the earnings weekly options and use that to make your kind of structured product? I can understand what you're thinking. You want mom and pop to be able to trade earnings straddles, I guess. Maybe there's another argument to be had about whether they should be doing that. We come down on this show, I think, and generally on the network, probably the answer is no. But I think it's a cool conceptual idea. But yeah, this stuff exists in the marketplace now, and it works. You could do it. There's no fees. There's no loads. There's no slippage. You just go out and do it. So I understand where you're coming from. I can laud the effort. I don't know if I can quite get behind it. Mr. Meatball, couple of questions to unpack here. A, should we be opening up earning straddle trading to more people out there than who could do it now, who are savvy enough to understand it now. And then B, what are your thoughts in general on maybe just some sort of new vol product around earnings? You think there's a market for that?
Yeah, I would love to see something like that, but I'm just not sure how you would do that. But it's a great idea. It really is. So, yeah, I don't know. I don't know how you would do that, but if you could, I would totally do it.
There you go. Maybe that's a new product for the Carmen Line Fund, or the Fund of Families is your new replicated earning straddle product. What do you think about that, huh? Oh, here's your replicated earning straddle fund, so you do it for them.
Yeah, that's a great idea. I'm all about it, but I don't know how you would actually execute that.
You just go from week to week, looking at straddles, and you take the weekly options. You do a little bit of your homework, look at the ORAS report, you decide this straddle is too cheap, I want to buy it, or this straddle is too expensive, I want to sell it. It's very basic, very binary, and then you let the dice fly. You do no hedging, no nothing, and however it works out. There you go. How about that?
Great idea. How can I lose?
Then you have the advanced fund that does a little bit of gamma hedging and things around it, and plays a little bit, and takes one leg off if it works, and then works the other, that kind of stuff.
Yeah,
and
how can I lose?
That
sounds like a brilliant idea.
People will be throwing money at this. I'm just doing your homework for you all day. I'm teaching you how to predict VIX. I'm giving you your new products. I'm naming your funds. What more can you ask for from a show, sir? It's amazing how much you get from this program. Even more than the listeners, I think, sometimes, Mr. Meatball. All right, we got time for, yeah, we can do one more. People have vol products, other vol products on the brain today. This last one comes from M Times. He wants to know, what do you guys think of UPRO? Does the levered nature of this product make it a decent stand-in for some of the other vol products out there that have been defanged recently, like SVXY, or delisted like XIV? UPRO, if you're not familiar, listeners, is the ProShares Trust product, trading right now right around 140.5. Unlike our other friend XIV, does do some option paper. Does about 2,400 contracts a day. It has pretty much exactly that so far. The lion's share of that activity coming in the puts, not surprisingly, given the product is selling off a little bit here. And this is another one, Mr. Meatball, that we don't typically work into our usual rundown here on the old show. What's your thoughts here on, if you have any, on UPRO from ProShares?
I don't know too much about it. I would need to know. I would need to know a lot more.
This one, if you're not familiar, listeners, this is a 3x, hence the Ultra. So it's trying to replicate 3x of the daily investment results, both upside and downside of the S&P. So a little bit different than he's kind of conflating this with SVXY and XIV. XIV and SVXY were not levered; they were inverse. A little bit different. This is levered. This is 3x. So, and it's not inverse; it's just 3x the movement. So, a little bit of an apples to oranges comparison. Not one we really talk about on the show because it's not a straight up. I mean, there's a vol component, but it's not a straight up vol product. So not one. Maybe we'll keep an eye on it. It does some paper, and maybe if other listeners are intrigued by all things UPRO, we can get that ball rolling. But for right now, it's a little bit of a different category here than all things SVXY and XIV. All right, good questions. We did a nice dent in our question pool. I'm sure it'll fill up again by next week. Now it's time for us to keep on rolling. It is time for my personal favorite segment, the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Mr. Meatball, it must be painful to be so horribly wrong just twice in a single episode. First with the prediction, and then secondly, your prediction at the top of the show that it was going to sell off horribly and not come anywhere near it because we dropped a little bit, but then it came right back up right as the segment began, right around 13.53 when I hit the button on the old segment. So I was a whopping 0.02 off, which is, again, about as close to a crystal ball bullseye as you are going to get. So I hope you don't take any umbrage when I go first this week, because I think I have earned it yet again. You got some catching up to do, you and your cohort there, Mr. Rock Lobster, if you're going to catch me in time for the end of the year, sir, because I'm starting to pull away. It's like Jordan and like a high school basketball team, and you guys got to put on your A game here. All right, let's move on here. Actually, it's just ticked up 13.54, so it's 0.01 away from my prediction here. So I was feeling this level, obviously. This time last week, I thought we'd be a little bit higher where we were, and that's turned out to be exactly where we are right now. This time next week, we have a lot of factors still at play. We have these somewhat widening tensions in the Middle East, but that seems to have mostly been factored in unless we get into a really, really hot shooting war over there, and that could change things up. We have commodity factors at play there, crude and other things working out there as well. Earnings has mostly tapered off. So, I mean, there's some names coming out, but the big names have pretty much reported at this point. So not a lot of curveballs left to come on the earnings front. But I still am feeling a little bit lighter this time next week. We are heading into that time of year where vol in general does tend to come off. Let's see. This time next week, I am going to go with all that a long way around to go to, I'm going to say a little bit lower than where we are this week. I'm going to say 13 and a quarter. All right, Mr. Meatball, have at it, sir. How would you like to embarrass yourself this week?
What did I guess last week?
12.75.
12.75.
So you're keeping it again this week?
Yes.
You're pulling a Russell. If it doesn't work once or 18 times,
keep until at some point I'll be right.
You know, I've said before, I would not be upset if your prognostication, easy for me to say, came to pass this week, but I'm not going there for my prediction, sir. All right, listeners, that music means you've done it. You have survived to the end of yet another Volatility Views program. Allow me to apologize right now for the wildly aberrant and just completely inaccurate estimations of Mr. Meatball. Just tune into my portion of the crystal ball. You can forget about the rest, because we all know where the value is there. Of course, it was a fun journey through the world of volatility today. Talked a lot of different, not just vol ETPs, but other ETPs you guys clearly have on the brain. We'll see if we can work a few more of those into the program. Talked about our old friend VXX and SKU, a little bit of commodity vol. Again, more of that coming up on TWIFO in about 30 minutes. Also talked, did your grandmother cause the sell-off and the vol spike in February, and all the other fun stuff on the old program today. But before we go, let me go back around the horn, see what the Meatball and his crew have cooking up their sleeves that may interest you. Mr. Meatball, I know you've been working on a few things like VIX Made Easy and VXX Made Easy. If I want to check these things out for myself, where should I go? What should I do?
Go to optionpit.com, and if you want to learn about our new VXX Made Easy, you can go to optionpitmembers.com/EasyVXX. If you're an accredited investor and you want a smarter way to be long the S&P, shoot me an email, mark@Carmeline Capital, and I will be happy to inform you on what I'm up to.
Including his forthcoming straddle replication fund, which
yes,
will have a better name than that, of course. Earnings Palooza Fund. How about that, Mr. Meatball? I like that.
I love it.
I like that. I think you may have a home run with this one. So stay tuned for the forthcoming Earnings Palooza Fund. Also, stay tuned if you're listening live. We'll be back in a whopping 29 minutes for all things commodity vol. So stay tuned for that. Otherwise, we'll see you next time for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.